Testing, testing, 1, 2, 3, testing, 1, 2, 3. Testing, 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 testing. You know what, I forgot I got a logo up here anyways. Loud and clear, video okay. Woo-hoo-hoo. Yeah, you're not so clear though. Lags like a turtle. What am I gonna do, Kareem? What am I gonna do? Well, hey, good morning everybody. By the way, FX Street, I think we're at NFP number 136. I think about 4 months ago, someone there might have been a mistake on the number. I don't know. Someone's going to have to go back and count. Either way, 135 is not bad. So welcome to trade non-farm payrolls number 135 and a half. How about that? I have to apologize. I might have to eat some breakfast from time to time. But how are you guys doing? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Namaste. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Right. Thank you, moderator. TradersWay.com. Woohoo! Oh, Chief FX Market Strategist. Hey, look. I'm trying to earn your loyalty and respect by sharing, I don't know, 15 years of trading experience. Imagine if you sat in front of your charts every day for that amount of time, for hours and hours and hours and hours, and sometimes like days straight. And then you give back by sharing. Well, that's what I'm here to do. And if I can earn your loyalty and respect, I'd like you to show it by opening an account at TradersWay.com. Even if it's just a demo, give us an opportunity. That's it. Check out our spreads. Check out our execution speed. I think you'll be surprised. Spreads are competitive. I used a third party to test our execution speed, and we're faster than most, especially the big boys. Our customer service is great. Swing on by, man. Give us an opportunity to be the prime broker to your successful Forex trading business. What was the greatest trade? I think my best month was like 15,000 pips, maybe more. But I've never seen a great trade. Some trades don't work out. Doesn't mean they're bad trades. Some trades you get super lucky on. Doesn't make them good trades. Okay. Although, I'll tell you, many years ago, I was playing poker, in fact. Met a person, and I'm like, hey, so what do you do? And they're like, I'm a currency trader. I'm like, no, I'm a currency trader. And I said, so, tell me about what you do. What kind of trading? Are you a scalper, spot swing? What do you do? Like, we make one trade a year. My family's been doing this for generations. I'm like, what are you talking about? What you talking about, Willis? Amazing, huh? I'm like, oh, really? Well, I do 45 trades a day. So whatever. So you guys excited about non-farm payrolls? I am. What are we going to get, $1.85? Al, is the dollar going up or down today? How the hell would I know that, Al? Or is it AI? Maybe it's not even a real question. Is that an automated question? Yeah, why would I know? How? First of all, should I make up an answer? Oh, yeah, dollar's definitely going to be weak. So, how about this? Let's change the questions a little bit. Okay? Now, first of all, if you're trying to figure out what the market, I know you are, I know, but this is something that I've been working with Traders Way clients. And that is this idea that if you're trying to figure out the market, if you're trying to figure out what the market's doing, you've already lost. Okay? So, what you should be doing is figuring out, because you're the expert. So let's say, well, I'm just going to assume one day you want to be a professional Forex trader. Not trading your money, trading other people's money, right? Why do they hire you? They hire you to make decisions. To say, wow, you're an expert in macroeconomics, technical analysis, all this stuff which to some people seems like voodoo magic or something, right? Well, they pay you to make, since you're an expert, they pay you to make decisions on their behalf. That's really what it comes down to, right? What's the dollar going to do? Right? Great. Which means you need to make the decisions. You need to do the analysis, both technically and fundamentally, and have, let's say, at least a 3, 6 month, 12-month outlook. And what goes in there is economics, both micro and macro, central banking policy type stuff, as well as long, medium, and short-term technical analysis, right? And here's the thing. Even with all that being done, you're not going to be right all the time. Okay? However, when the market agrees with the decisions that you have made, so you see the difference? You've made a decision versus you're trying to figure out what the market's doing. If you've made a decision, if you say like, okay, let's say you want the dollar to get strong. Your analysis tells you that this dollar weakness is over. And that by the time we meet for non-farm payrolls again, it'll be strong, not weak. Let's say that's your opinion. When you're wrong, like this analysis you see that I've already done, when you're wrong, you don't really get a setup. You don't really even get an opportunity to really sell. It didn't do what, like, let's say you can see I'm setting up like a head and shoulders type thing. Well, I didn't get a head and shoulders type thing. So I either traded and lost a little bit of money, or I didn't trade at all because I didn't get a setup. You see that? So I either lost a little bit of money, or I didn't even get to trade at all because the market didn't agree with what my bias was. Okay? So in that scenario, losing a little bit of money or not even getting into a trade is actually a pretty good outcome. But what if it actually did something like this? Then the probability is I'll make some money. Maybe not a lot, depending if it's trending for me or if this is really a counter trend trade. And right now this is technically a counter trend trade. So it's twice the risk for half the reward. So I'd make some money, right? And there might be a follow-on trade, maybe there's another one, and then if it turns from a bullish trend to a bearish trend, I'm gonna be much more right because the market now agrees with my analysis versus where we're now, which it doesn't quite agree. So you're in the scenario where if the market does turn bearish for this pair, I'll get a lot of setups and I'll probably do all right on each setup. Or I can just hold the trade and do quite well in that one trade or whatever my actual strategy is, not bias, strategy for trading. So in that scenario, I either do quite well or I don't get a lot of opportunities at all. And now you repeat that for 25 years, and you got yourself a career of when the market agrees with your analysis, you'll do quite well. And when the market disagrees with your analysis, you either don't get a trade or you lose a little bit. So you're in this scenario of losing a little bit or not trading versus trading a lot and doing quite well. What's the difference? The difference is if you're sitting around trying to figure out what the rest of the market's doing, they've already done it by the time you figure it out. So you're either wrong or you're late. That's not a, that's a much different outcome, isn't it, than not trading or trading a lot simply because the market conditions either agree or disagree, right? So whatever. Cheers, man. So I don't know if you know, but I have a tiny head. I'm actually a very tiny person. So don't laugh at me. All right? Or like my mother says, I'm an idiot, but I have beautiful hair. Yeah. So anyways, let's get going. Let's do some technical analysis. We'll go over the fundamentals. Oh, let's start with the numbers. What's it going to be? $1.85? Great. Do you know why I'm not going to give you a number? Why am I not going to give you a number? Because you already have a number. What? Oh my gosh, look at how beautiful this is. Good job, FX Street. That's beautiful. I mean, look at that. Well, Theo says $1.76. Great. Amazing. Okay, look at all these numbers. Oh, look, my name's in here, but it's misspelled, FX Street. So who else put Tor's got, and Kathy, and Tor, and Brian. So I've met Kathy once or twice. I know Joseph quite well. Haven't spoken to him in years, though. Nevin, I don't know. James I've only met once or twice. Cool. By the way, Joseph, very, very smart. Great on the fundamentals. Well-spoken. Successful trader. Lots of experience. Do you know what the most amazing part about his story? I don't know if he tells it. Maybe I'm not supposed to tell. I think I can. No, maybe not. Yeah, well, maybe I should. He's got, like, I think the ultimate story of how he got into currency trading. Maybe I'm not supposed to tell this. Well, maybe if you ask later, I'll tell it. It's a great story. He's a great guy. All right. So, anyways, FX Street, spell my name right. All right. So you've gone through this, and boy, they've done such a great job. Skip, right? So ADP, all that kind of stuff. So ADP has been a disappointment, right? The deviation, actual consensus is great. Okay, so all of this is basically how to build a model. So I wrote a similar article, I don't know, 3 years ago. I remember it because my kids were running around the backyard playing. And they're like, what are you doing, Daddy? What are you doing? Come play. I'm like, I'm writing an article for FX Street on how to build a model for non-farm payrolls. They're like, oh, come on, Daddy, play with us. So I did that. So I wrote the article instead of playing with my children. But this is about building a model. This is about trying to figure out what the headline is, okay? So you should really go through this. Just looking at all the quotes, very nice. Okay, you should go through this article and learn all you can about building a model for non-farm payrolls, so that you understand just sort of the basics of where this number comes from. How does someone come up with 176? Why not 184? And why are some analysts consistently wrong, and how come most are consistently wrong? And how come some are inconsistently right or close? Like, where does it come from, Basil, right? What does it all mean, Basil? And so you look at all the different things that are happening around you over recent history and over a trend of history. And it's really like an exponential moving average if you think about it. You look at the trend of everything. So go through the article. It tells you. But just you basically look at the trend of all the different things that are in the article. And then you look at what's happened most recently in those trends. Squish them all together into the meat grinder, and a $176, 176,000 comes up. So I don't know whoever came up with 176. I actually don't know what their model is. For example, and I believe it's in the article, but I don't believe anyone included Challenger reports in their model before me. I've never heard of anyone doing it. And very often, if FX Street's reporting the headline numbers being a $176, and I say, well, I have to adjust and account for the Challenger report, so I would tweak mine. Very often, mine would be closer, and I would say, oh, well, I just included Challenger. So I think now maybe I think that article says, because I wrote sort of a version of it 3 years ago, I say use Challenger report, and I bet you now everyone's using the Challenger report. Great. Good. Yeah. It's at FX Street. Try their home page. Yeah, it's there, bro. Yeah. All right, I got to tell the Joseph Trezvani thing. He started out in New York City. I think he's born and raised around New York or in New York. He's very much a New Yorker. But he started out as a cab driver. What a rags to riches story. He's super smart, great guy. There was no luck involved in his success, but he's very, very successful. But he started out as a cab driver. Did whatever it took to get into the game, so to speak. And all of a sudden he gets hired to be a trader, and they ship him out to Bermuda. And he's like one of, I don't know, 5 people on the island of Bermuda that does currencies. And they're like, hey, so they just get together, develop a friendship and all that kind of stuff. And that's how he became a currency trader. I think he was the new guy. They're like, all right, you're going to be in this team. You're going to go to Bermuda. What am I going to do in Bermuda? They probably walk in, hey, what do we do with the new guy? Oh, new guy? We got fresh meat, new blood? Give him that FX thing. Oh, I did, Kareem. Or Ian, yes. Thank you. Yeah, Kareem says, I love that kind of success story. Yeah, he's a total success. Great trader. Amazing fundamental analyst. I love his stuff. He's right a lot, I think. But just to think, from humble beginnings to super success, pretty cool stuff. So, but that might be a secret, so don't tell anybody. Unless he likes it, and then totally tell him I told the story. All right, so, all right, we need to do some analysis, right? Or should I teach you how to scalp? How many people already know, the scalp technique? The high volatility event-driven strategy. I mean, I've done it 135 months in a row. Everybody good, or who needs to know? Kareem, really? All right. Henley? Oh, you already know it. You don't. All right. I'm like, Kareem, really, Peter? All right. Yeah. All right. Yeah. Well, it's like, yeah, everybody in my army, right? Marina, you of course, right? What's up, Marina? Woohoo! Man, I'm missing South Africa. Got to go to Cape Town this time. Party at Marina's house. All right, so do I have a drawing tool? No, I don't have a drawing tool, huh? Yeah, I will. I won't spend a ton of time on it though, but I'll go through it. So, by the way, rules of engagement here. I'd like you to participate. This isn't a speech. You'll notice I don't have PowerPoints. All right, we're using live market stuff. We have a high volatility event-driven strategy coming up, but then after that, we got what, the stock market open and some other things. I mean, we have tons and tons and tons of time. How many other 3-hour webinars have you been to at FX Street? Okay, so with that in mind, we have an opportunity here to really interact and do something special. I would like and encourage and ask and maybe even beg of you to participate and ask questions. Okay? If you want to know about scalping, we can cover scalping. If you want to know about spot trading, we can cover that. If you want to talk about swing trading, we can talk about that. If you want to talk about position trading, we can talk about that. If you want to talk about building portfolios, we can talk about that. If you want to talk about fundamental analysis, we can talk about that, from banking to central banking to economics, macro and micro. I've learned a few things. I'm also Harvard educated, so which only means I just disagree with everything my professors say. It's amazing when you take an economics class from a professor and the first thing you think of is, wow, this thing that they're talking about totally doesn't happen in the real world. I'll give you an example. The value of a stock is based on the future value of all dividend payments. What? That was true in 1950. You're still teaching this? Oh, yeah. I'm like, when is a stock valued like a dividend payment? See, like a bond with a coupon payment over the course of time has to be discounted, and you can say, well, that is the price. Right? Now, the actual trading price could be a little bit higher, a little bit lower, depending on the perceived risk, but it is the discounted cash flow payments, right? But a stock, when was the last time you bought a stock because you were collecting dividend payments over years and you're going to discount it? Now, some are like that, but not all. But anyways, so we can talk about a lot is all I'm saying. I'm here for you. I love you. You're my sweet baby. Yeah, how to get out of losing trades, that's a good one. Oh, Peter says, yeah, remember how I asked? That was just like a few days ago, wasn't it, Peter? Oh, Marina's into vodka, huh? Yeah. Could be dangerous. Let's talk. Peter says, let's talk strategies and targets for fund managers. Come back from the Oh, we can definitely cover all that. So we'll handle those the big picture stuff. Let's say we could start after NFP, but before the stock market open. Okay. All right. So let's go to this. And I wish I had a drawing tool. I feel like naked. I don't have a drawing tool. Huh? I'll have to think about that. I'm going to have to download Camtasia or something. All right, so let's talk about this. You can see here that I have a trade plan that maybe euro dollar comes down. And it hasn't. Does it mean I'm wrong? No. There are lots of things on this chart which I think are fantastic. First of all, price action. Can you see the price action? Sorry, I realized I didn't have my watch on, but then I remembered I needed it. Forget it. All right. The price action here, this goes back a long way. So this yellow, this gray, these are all things that I've added. Okay. You know what? Maybe we should just do a new one. Let's just do a new one. I'm going to call it, let's do pivot clusters. Okay, it's all gone. Okay, there we go. Okay, price action. I hope you don't mind that I go into price action here. A trend is simply a series of a higher high followed by a new higher high. Followed by a new higher high. Now, what's a dead giveaway that this uptrend might be over? Wisdom or wise man? Yeah, wisdom? Wisam? Yeah, not a problem. Just stick around and make sure you ask, okay? Dead giveaway is that. Because you don't always have to have a double top green. Okay? But you always have to have a lower low at some point. It might be after the double top. But there may not be a double top. So therefore, the lower low supersedes the double top. Okay? And I guess, you know, GM says no higher high. That is actually probably even better because you can consolidate. In my book, I talked about an old man easing into a hot bath. And that's first and foremost set up by no higher high. And then that no higher high usually is followed up by no lower low. And then you consolidate before the lower low, right? So yeah, I'll even go with that, GM. So let me redraw this. What GM is saying, by the way, just watch the orange lines I'm drawing. Don't look at my pivots. You know what? Let's just do it this way for now then. Okay. Whoa, what happened there? Okay, we got ourselves an uptrend. Okay, followed by something that could be like, let's say this. Does that look familiar, guys? Oh my God, Fred! Look at Fred. Fred's like, when he buys or sells at R2, he loses. Oh my God! We got to talk about that, Freddy boy. Holy smokes! Oh, Fred, we can fix that, buddy. Holy smokes. Who told you to do that? You got to spill the beans, Freddy boy. He did, Freddy boy. And how did he do to you? That's my Barney Rubble. Who told you to do that? You got to tell. I'm not going to help you until you spill the beans. Who told you to do that? All right. Well, Fred is spilling the beans. Okay. This is how the Forex market reverses. Okay? You very rarely get a straight down scenario unless there's some sort of right fundamental thing, right? Okay. Wait, could you add price action analysis? The concept of supply and demand, psychological behind. Yeah, hey, no problem. Art's trying to squeeze blood from a stone here, right? Yeah, sure. Well, Fred, I'm not going to answer until you tell me who told you to buy it weekly R2. But whatever. Well, yeah, we'll get it. No, well, and you're also, and you're talking, oh, you're talking about a mood trade, aren't you? Aha. So you're applying daily pivot point strategy to a weekly pivot point. I get it now. No. Hey now. Whoa. Hold your horses. Nobody ever said that. We'll circle around later, okay? Yeah. We'll circle around. Let's do that after the non-farm payrolls, okay? Will you be around, let's say, an hour and a half? Cool. By the way, did you get FX Street sent out a link for 60% off my training courses? All of them bundled together, 60% off. And I think like today is the last day. It's the 4th, right? They sent out an email like a week ago. So if you also want to take the swing training course, the scalping course, the fundamental course, the price action course, the basic training course, it's all there, 60% off, but I think today's like the last day. Right? So if you want that, you have to call. You didn't see it? You contact Traders Way. Go to the website, tradersway.com. Contact support. And make sure you open a demo first, right? Open a demo account. It takes you 1 minute. And then contact support and say, hey, give me the coupon code for FX Bootcamp. And today's the last day, so there you go. I forgot about it. They sent out the coupon a week ago, so it's not like I'm trying to upsell you or something. Cool. Yeah, but you got to do it. Okay, going back to price action. Sorry. The first giveaway here is the fact that there's no higher high, right? So let's do it sort of like this. And then usually what happens is we fall into a range. Have you seen like something like this before? I would assume. So this could, most of the time, not always, indicate that we're approaching the end of a trend, right? Now, if it was like, if you had this like a rising wedge, that would be different, okay? This isn't a scenario like this, okay? I call this an old man easing into a hot bath. That's how I describe a reversal in Forex. Because what I think is going to happen eventually is this. And that is the beginning of the downtrend. That is now the reversal. So originally we're discussing what's the beginning of the reversal. And I was thinking the lower low, which is this. Somebody else said the double top, which I said, well, you don't need a double top. I mean, it could do this. And it'd be just as valid with no double top, right? That's all I'm saying. And then someone else, though, said the failure to make the higher high, which encompasses both, doesn't it? Okay, so, but it doesn't mean it will reverse. But the lower low, I think, to me, is the aha moment. Okay? And then guess what? I still wait. And I'm looking for something like this. That's where I sell. This is my sell here. Okay? All right. So, let's talk about price action. Does anybody here use Fibonacci? A Fibonacci trader does something like this. Okay? A Fibonacci trader is looking for a retracement. Now, my sweet spot when I'm using Fibonacci is somewhere between the 3A2 and 618 Fibonacci extension. You know what? I need my clock. I need a watch on. I'm looking for my tool. Does anybody have this special tool? Found it. Hang on. I gotta have a watch because I keep looking. Since time is a ticking, but I have to fix something. Hang on. Oh my God, I can't see that. Look at that. The screw came out. Gotta have a watch, you know? I can't see this at all. I'm a blind man. There we go. Aha! Ha ha! I got it. Boom! Gotta have my watch. They keep looking like, what time is it? When's the news coming up? We got some time. All right. All right. So you're looking for a sweet spot. Now, which line it bounces off on this retracement, whether it's the 3A2, the 50%, or the 618, what Fibonacci tries to do is predict, kind of give you like a rough guide as far as the extension. So 50% would predict somewhere between the 3A2 and 618. A 3A2 predicts the 618, a 618 predicts the 13A2. Again, find some training. There's millions of people that can teach you this. Okay? Now, price action uses that as well. So if you're not familiar with price action, but you're familiar with Fibonacci, it's all kind of the same thing. And you remember how some people tell you Elliott Wave was a genius, the Elliott, whatever his name is? Elliott Home. No, he's not a genius at all. So, you know what he does? He uses Fibonacci and price action. His contribution was, what was it, 5 waves down, 3 waves up. So what he's done is he's taken Fibonacci and price action and put it together with multiple time frames. It's not hard at all. So, okay, so it's all intertwined. So if you use Elliott Wave, you probably get what I'm talking about. If you use Fibonacci, you get what I'm talking about. You don't need either of those things. You can just use price action, and you'll still get the same benefits. Okay? So, anyways, a retracement, here's the cool thing. Once you have a new extension, let's see if I can get rid of this. Once you have a new extension, once you're up here now, okay? Let's get rid of this. Really simplify. Once you're up here, the trick is to drag this line across. And you have a new buy zone. You buy again here. Okay? And when you make a new higher high, you should do this. It's like routine. And it gives you a general idea of where you should be buying in the future. Now, it's still a Fibonacci retracement. Okay? It's just saying, hey, it's more likely to be a 618 this time than a 382, and you should pay attention. Now, it's a guide. It doesn't have to go back that far, but it probably will. It's when you stop making higher highs that you should switch gears. Okay? And the interesting thing is, once you make a lower low, you're in a new trend now. And price action will say, instead of using old resistance as the new support, use the old support as the new resistance. And you'll have the basis now of a new lower low, okay? Which means as soon as you get the lower low, you need to drag this across, and that'll probably be a sell zone in the future. Okay? And you just have to know where you are in here. As soon as you get this, so the reason this was important is the failure to make the higher high will say, hey, you're now consolidating and you should change your strategy from bullish to at least neutral. And once it makes a lower low, you can go from neutral to bearish. And that's price action fast. So now we're going to fold in some pivot points. Okay, but looking at this, can you see all the beautiful price action? Up, 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 up. Okay, this old resistance becomes support. Okay, you see that? New higher high, drag this resistance across. Now we got our new support. Now it didn't quite make it, right? You see this? Didn't quite make it. But it's pretty gosh darn close, isn't it? Now a new higher high, drag the resistance across. New higher high, drag the resistance across. Okay? New higher high, drag the resistance across. I'm only wondering if we're failing now. Is it time to roll over? And pivot points have to do a lot with that. I wonder if it's going to fail. We didn't have that before, right? You don't see that typically. Okay? Does anything here say this might be the end of the uptrend? Do you see that here, guys? Is this enough information to say, well, I've been buying with price action up and up and up and up and up and up? Do you see anything here that suggests the uptrend might be over? I'm testing the lag here, so please answer. All right, so we've got about 20-second delay. All right, so no. So you can trade just with price action. In fact, I don't even know if I have just a sample. I mean, let's do this. You could trade with just like this. That's enough information to be successful, okay? 200 EMA just simply says it's a trend up, and the rest is price action. That's enough money to have a successful Forex career, okay? That's all you need. Whatever else you've been sold, you don't need. However, and this is a big however, I usually say but then I have to throw in a big but joke, and nobody likes that. It's just not professional. So, and that's a big so. The one thing I would add to this are pivot points. Okay? And a whole bunch of other things. But let's just do this. I'm going to go indicator, custom, and I'm going to throw down weekly. Average falls. Okay? That's what that would be my bare minimum. And you know what? I don't even need this. Let's kill the 200. It's too much. Okay? This is what I need, I think. I could have a career on just this information. And the pivot points are giving me targets for the week. These are weeklies. And price action is enough for me to figure out if I'm bullish or bearish. Is that all right, Marina? Marina says I have too much information on my charts. That looks great to me. That's enough. What more does one trader need, right? Now, there are some useful things that you can fold in. So, like oscillators help me understand whether price or market is overbought or oversold, but I don't need it, so on and so forth. I like to use monthly and weekly pivots. Okay, I love monthly pivots, so I'll fold them in. Moving averages, again, gives me sort of like a relative strength kind of idea. Dynamic levels of support and resistance, but I don't need them. Okay, that's all I need, but I'm going to add to it because I can. And that's what I use. So here you'll see I'm using these monthly pivots. It's the ones that you see way to the right, and then ones farther to the left are weeklies. Okay. Okay. All right, so we got to cover the high volatility event-driven strategy. Okay, when the news comes out, is the Euro USD going to go up or is it going to go down? Somebody's already asked me this. I don't know. Because we don't know what the number is. And I don't know what positions traders are in. Bottom is probably stochastics, set at 835. Okay. So let's just pretend euro dollar goes up. Okay. This would be a 1 minute candle. If the initial move is up, if my first scalp potential is bullish. Okay? If that is the case, I want to wait and buy. Only because it took off to the upside. I admit there's nothing else to it than that. It could be wrong, but how much would you lose? If you bought the 618, where are you going to get out? The 100% retracement? So how much are you going to lose? 25 pips? If you can't afford a 25 pip loss in a scalp, you're over leveraged. So the general idea of what we're going to do today is this. If the initial response is up, your first opportunity is going to go long. Okay? If the first initial move is down, then you're simply going to say to yourself, okay, I'm a bull. I want to wait for a 382 to 618 Fibonacci retracement back up, in which case I'm going to try to sell. It could happen in the first 10 seconds. It could happen in the first 4 minutes. Okay? By the way, this is in my original How to Trade Non-Farm Payrolls article, so you should be reading that. Hang on, let me get TradeTheNews.com going in the background. Okay, so that's what we're going to do today. The second one is to let it move, let it do its thing, and then we're going to trade off a counter trend off of the key pivots or key psych levels, key support and resistance. All right, so for example, if I can fit this in, where's the next level of resistance up here? Okay, one of these lines. Okay. Okay. Maybe up here, and then we counter trend down off the monthly R1, if that happens. Or buy it off here if it heads down. But we'll see if we get there, okay? So we're about 2 minutes away.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configuration are working properly, and you are now...
So I think we're hot to go, HOTTOGO. All right, so there's two ways you trade non-farm payrolls, in my opinion. You scalp the volatility, which is non-directional, so to speak, or you wait. Could be 5 minutes, it could be 25 minutes, but you counter trend off much bigger levels of support and resistance. Not a volatility trade, but just sort of a place in which there's going to be a great unload of either profit taking or repositioning. Where do we go to focus on? How about euro dollar? Or everything. Ismail says, in my opinion, it does not have sense to operate to trade to wait at least an hour. Yeah, well, what you're doing is you're waiting for the counter trend. And
90 seconds.
You're not trading the volatility, which is fine.
U.S. payrolls for July expected at 180,000 after 222,000 in the prior month.
Which tells me you just don't know how to trade volatility.
3% in the U.S. Earnings expected at 0.3% month-over-month, 2.4% year-over-year. U.S. trade balance expected at minus $44.5 billion for June. At the same time, we'll get Canada unemployment and trade balance data as well.
So please visit tradersway.com, guys.
Change from the prior.
Especially if you want that coupon code. 60% off anything or everything on FX Bootcamp.
Non-farm payrolls expected at 180,000 for July. Unemployment expected to drop 0.1 to 4.3%.
Thank you, FX Street, for hosting us.
Under the ADP employment change earlier in the week was 178,000, a little below 190,000 estimate at the time.
Go there to get your coupon code if you want it. Today's the last day. All right, hang on to your hats.
Payroll and employment data in just a few seconds. $209,000.
Whoa, better than expected.
$180,000 expected. Prior buys 11. A little higher to 231,000 from 243,000.
Based on
4.3% is in line with expectation, dropping 1/10 from the prior hourly earnings at 0.3%. Month-over-month is in line. Year-over-year at 2.5% is 1/10 higher than expected. Weekly hours at 34.5 is in line with expectation. Underemployment at 8.6% remains the same. U.S. trade balance at minus 43.6 billion, a little narrower than the minus 44.5 billion expected.
Yeah, lots of dollars
slightly narrower as well. Canada.
It's the end of the euro,
at
as you know it.
6.3% is 2/10 lower than expected for
It's
Canada.
the end of the euro, as you know it.
Change to employment at 10.9,000 versus 12.5,000 expected for Canada. Canada trade at minus 3.6 billion versus the minus 1.25 billion expected. Again, non-farm payrolls at 209,000, about 180,000 expected. Prior buys a little bit higher as well, with unemployment in line with expectation at 4.3%.
Cool. Thank you, Trade the News. All right. Woo-hoo-hoo-hoo-hoo. Really? Yeah. U.S. dollar crushing it across the board. So, you have to ask yourself, are you going to go for the volatility? Or are you looking for counter trend trading? The counter trend is probably going to be here, but can we get that far down? What is that? I can't even see it. $1.16.5. Where are we? $1.18.5. We're not going to go that far down, are we? No. So how about here? What are we talking here? $1.18. Maybe $1.1780. So let's mark it. I'm going to mark it off this bottom. That's a long ways away. Okay. Here comes the op. If you're going to take it, you need to decide now, guys. There's no committee meeting or group hugs. It's the end of the euro as we know it. That's what the volatility trade is for. Which means if you traded the 382, you're risking this much money. So where's FIDI? FIDI is right there off the pivot as well. So this is sort of even better, but we might not get it. It's already made a lower low. So you'd risk 50, it's about 40 pips, I guess. Not much of a pullback though, huh? Maybe the market won't giveth today, huh? She's a fickle trader. All right, so let's see. Now we got to adjust. I can't even see my pivot. Or my fib. Got to adjust. Still about the same, isn't it? Now we're looking at a 382618 probable. Like this. This is most probable now. So it's 50% 618. Josh says, how far can it go down? Well, maybe 0. Yeah, Pig Dog might be a better trade, sure, but it's fine. You need to make decisions. I'm not putting you into trades. You make your own decisions. I mean, I'm looking behind me, and there are tons of trades you can be in. Just make a decision. All right. Nah. Here it comes. Whoop, 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 whoop. Oh yeah, no, you're sure. GM says like based on the fundamentals, you're more bearish on the pound than you are the euro. That's fine. Totally, I totally do. Totally agree with you. Okay, we're in the interesting zone now. Oh, am I bothering you? Poor Gunzy. All right, so let's see what happens. We're in the spot. If it breaks above that area, if you're up into here, no trade. This is last chance. Remember, we haven't had an entry yet. Careful. How this candle behaves will indicate whether you have a short entry or you don't. Wait for it. Wait for it. We need to start seeing red here. Got my hand in my pocket, got my finger on the trigger. See, we're right at 18 and a half. We're right on a 50. So you could do this, right? And then you drag your stop up. Right? And you can do, sorry, you can do this and just, that's all you're risking, hardly anything. What? How many pips was that? 15 pips. No, I'm risking 15 pips. Oh, sorry, Gunzy. Sorry. I got to be careful. The gunster. All right. So what else is going on in the world? Let's take a look at our pig dog. So going back to the price action stuff I was talking about earlier, look at the roll reversal, eh? Here's the lower low we're talking about. Okay. And also, who was it that was talking about selling at R2 and couldn't make money? Look, there's a couple of things I want to say right off the bat. When you're selling up high, even when it's resistance, you still have to look at market conditions. So you could see this was predictable, this sell off the red zone, because it's red because it means down. But it's still, we know this was an uptrend. So you have to ask yourself, are you selling at resistance in an uptrend? We're selling at resistance in a downtrend. And, oh, was it Freddie Boy? Yeah. So in that case, your expectations should change. Is it trending or counter trending that you're setting up? In this case, this is counter trend, and you can see it worked for a while. But with this new lower low, we're either going to consolidate or reverse. So you can see I already got this gray line here and the gray line here, and we're kicking off both right now. Fabulously interesting, isn't it? So it could go down past the monthly central, in which case you would think it would return to the monthly central or up here before continuing. Or at the very least, we start to consolidate, which means at some point it'll want to come back up and then come back down. But this lower low is technically important. Okay? Oh, we should set a limit, right? So we got a 618. It predicts a 1382. So let's do that. I'll throw a limit on here. And then I'll clean up my mess so it's easier to see. And set it and forget it. Done. MoveOn.com. All right. So that's our pig dog. How about this? This is my friend Kiwi Swissy. And as you can see, I'm long right here. Okay. And this is a swing trade, by the way. Right here is an easy up. You know, what I, oops, even though I'm long here, at that point, I certainly didn't expect what happened. Right? Because I actually can't influence where price is going to go. Look at that, it won't sit. I can't influence where price can go. I can only influence where I buy and sell. So this is a very easy, obvious swing trade, and it only predicts here. So I got lucky and went a little farther. But this area here that our current bottom is also an easy entry long if you're a bull. This is an easy entry short if you're a bear. So because I'm bullish, I'm okay right now. In fact, I'm going to move my stop and I'm going to lock in, oops, I'm going to lock in, I'm at what, 70, where am I, 70? I guess it's 70. And we're at 72, my stop is at 71.30. 71. So I have, this is about 150 pips, right? 130. All right, so I have 125 pips locked in now, based on swing trading. Okay. And I'll let it run for another week and analyze it. The nice thing about this is it's like a bond. I mean, I know I face systemic risk and all kinds of other things, but I have a stop on here, so I'm generally risk-free, right? Worst case scenario, I pick up 125 pips, right? But what if you considered it like a bond? How much money in interest will I earn over the course of a year on this trade? What percent? Mike says it's going to buck to 74.25. Cool. I'll pick up another 300. Great. Come on, guys. You're a Forex trader, but let's change it. What if you're not a Forex trader? What if you are a Forex investor? Not a trader, an investor. And you're interested in building portfolios. Okay. how much interest are you going to earn? Just think of it as a bond. Like you're buying a New Zealand bond, and it pays you interest payments. What's the percent that it pays you annually? Roughly. Josh says euro dollar not going down anymore. Well, then the counter trend is kicking in, but it's okay. I have stops. I have stops in place. What do I care? Cream says 2.9. No, I earn about 200%. Is that better than what your bank is paying you right now? It's roughly, it's not quite. I think if you add it all up, it's more like 180%, 175. But let's just say 200. Gives you an idea, and the math is easier. How nice is that? So, for example, if you used $1,000 of cash in your account to buy one standard lot of this stuff, okay? Okay? And I haven't actually broken it down, so I'm just giving you very, very rough, wildly rough numbers. But we're talking about the logic or the strategy of it, not, so just bear with me on this, right? It's more of an idea, okay? But let's say it cost you $1,000 in real cash in your account. So you have $10,000 in your account. You place one standard lot, and now your available margin drops from $10,000 to $9,000. You get it? So you've tied up $1,000 in cash to hold a $100,000 position. That $100,000 position earns 2%. But, okay, but, and that is a big but you only have $1,000 of your cash deployed. So 2% on your $100,000 is 200% for your $1,000. Do you get it? So over the course of a year, you would earn about $2,000 in interest, not including the pips. So at the end of 1 year, on the 365th day, you get stopped out at break even. You still made $2,000 in interest payments. Lovely till your mum. I love Forex. So, what if that was your whole strategy? Building positions, moving stops to break even. Building positions, moving stops to break even. And you're collecting interest. Now, first of all, it's a rich man's game. So if you're looking at your swap, if you're looking at your swap payments from your broker, you're probably not making that much. And it's probably because you have a very, very small account. And broker's got to cover his expenses. If you're only paying 10 cents a trade, somebody's got to, right? You're going to have a different account than some guy that pays $10,000 every time he makes a trade. So let's say you start a Forex fund and you raise, let's say $250,000, $250,000, like absolutely nothing, right? But let's say it's $250,000. You can call up your broker and say, hey, I want a high yield account because I'm going to carry trade. And they'll probably honor it. Okay? So it's really, this is a sport of kings. So one thing I'm trying to get across is that your skip scalpy little stuff, your 15 pips here, 10 pips there, stuff is what amateurs do. What the big boys do are quite different. one of the things that they do is that kind of strategy where they have bigger money, they get they get the full yield, they get the full carry, and they'll build entire positions of billions of dollars with stops on every trade. And their strategy, their intent is to collect the carry. And they pray for the pips because the pips are worth so much more. Okay? And if you haven't made, so usually like a new trader, their first goal is to make 1,000 pips a month. Wait till you have months that are 10,000 pips. Glorious. But the only way you can do it is pre-planning and hard work for many weeks and months in advance. And that's what amateurs cannot do or are unwilling to do. Okay? How did this stupid thing stop me out? Oh, I lost 15 pips. Yeah, stop was too close, huh? Too bad. So sad. Did anyone take the roll? Oh, look at that, huh? It's gorgeous now. So let's measure it. Was it a 786? That's a full 100%. 786 off that. Oh well, if you don't shoot, you don't score, right? Freddie, what, for FX Bootcamp? The class is recorded, but I did it live. But, yeah. Like I said, the coupon code that Traders Way has, I think it expires today or tomorrow. So just contact them. Say, I have a demo account. Can I have FX Bootcamp coupon code? And they'll give it to you. But you got to hustle, man. Again, it went out to FX Street people like a week ago. So it's not like I'm just like upselling you now. It went out to their database. You need to act now. You need to call Traders Way support or email them or text them or whatever. You got to do it now. It's 60% off. What more do you need? So, anyways. You'll learn spot, swing, carry. There's a fundamentals course. Right? It's fxbootcamp.com. There's a fundamentals course. If you started today, like 4 or 5 hours from now, you'll actually be designing a balance sheet for a commercial bank. I mean, come on, dude. All right. So let's look at our kitty cat. Kitty cat on fire. Look at this. Lots of interesting stuff going on here, huh? We bottomed out at last week's predicted bottom. Got the higher high double bottom scenario. So, a double bottom at predicted bottom. A double bottom at predicted support. This green zone is the bearish target for last week. Think about it. Last week's target. We double bottom Friday at the close. We're on the predicted bottom. Not a random walk. Okay? But what does a double bottom predict? Don't say reversal. There's something better than that. Yeah, Cream, you have a couple of million, don't you? You should have like some sort of VIP account. Okay? A double bottom simply predicts, in this case, a higher high. A double bottom would always predict a higher high. That's it. What should blow your mind as well is that this, what you see here on Monday morning, predicts up for this week, but also the rest of the month. What? But we've been in this downtrend forever. So we don't know if it's going to be true. It's just the technical analysis. So consider me like a concert pianist. I can sit down, you put sheet music in front of me, I can play it. Am I making an opinion? No. Am I putting some finesse or panache into it? Am I adding my own little personality to the music? No, it's Mozart. Just the way that Mozart wrote it, I'm playing the notes on the piece of paper. On my pianoforte harpsichord. So, with that analogy, this is just simply what the chart tells me. It's not my opinion. I don't know if it's going to happen any more than you do. But this tells me up. And in fact, there's information on this chart that tells me it might be up for a while. More than just this week. Even though we've been in a downtrend for 3 months. Okay? I'm not sure if you can see it. Ha ha ha! Wee wee! Well, you should. The threat to that analysis is happening now. I can't zoom anymore. All right, so I got to go back small. Pay attention to the 21 EMA on this daily chart. It might be a dynamic level of resistance. This monthly pivot, weekly pivot cluster with the 21 EMA on the daily about here, this whole area says, if you're a bear, you got it? Listen to me here. Listen. Shh. If you are a bear, not because of what you see on this chart now, based on your long-term analysis, based on your fundamental analysis, based on your analysis of central banking policy, Canada's micro data, global macro data, your analysis of the currency markets, your analysis of the commodity markets, and everything else glorious in the wonderful country of Canada. If you're pro-CAD or anti-dollar, US dollar, you need to be preparing right now to sell this. And you're like, but wait, if you're a bull and trading the double bottom, there's a clear entry here. You should have been in this trade days ago. Stop at break even or better days ago. And your analysis tells you this is going up not just this week, but next week as well. Now, if you're not using monthlies, if you're only doing weeklies, you should be taking profit right this second. Different trade plan, you understand that? So some of this chart says if you're a bull and you intend to be a bull all the month of August, there's a clear setup here. Just absolutely in your face obvious. And with that, if you're in a monthly swing, your target is much higher. But the threat is now. But all of this is baked into your analysis already. If you're a weekly swing trader and you're bullish, there's an obvious entry here. And you're now sitting on the target in which you should be taking profit. So, taking all of this, if you are a bear, you should recognize that monthly bulls are in a challenge zone. Weekly bulls are going to take profit. Therefore, you may have an opportunity being born right this second if you're already bearish. Don't look at this chart and say, oh, well, I guess now I'll be bearish. You're not in control if you do that. You're not a professional. You'll always be an amateur if that's how you think and trade. Okay? And you see this coming down right off of this area? None of it's a coincidence. Now, if you were in this trade 2 days ago and your stop's at break even, well, maybe you decide to take profit now because this is happening at an obvious place. Or you've already jammed your stop at break even or locked in a profit and you don't even really care because you plan on being this for the entire month of August. Are you freaking out on August 4th? What's wrong with you? Right? Right? Oh yeah, I'm patient and disciplined. I'm in this trade all month, but I'm chewing on my fingernails. Dude, if you have a monthly swing trade plan, it doesn't bother you at all. In fact, you expected this to happen. Okay? So I guess what we're doing here is some trader psychology. Right? And I hope the message gets across because I think that will help you become a successful Forex trader, not learning about the 5-8 cross or my stochastics. Oh, somebody asked me what my lower indicator was. It was probably this. That's the US dollar index. See? Dollar strong. All right, so since we did CAD, we got to do some oil. All right, so I did this on Monday. Who was with me when I did this on Monday for Traders Way clients? You don't need it, Mike. You can use it if you know how to use it, but you don't need it. But who was hanging with me when we did this? At the time, there was nothing to the right. There was nothing to the right. So the chart looked like this. Where's that thingamabobber? Oh, here and here. I guess it's this. Okay. The chart looked like that. Okay. So we drew a Gartley pattern. What? Oh, sorry. Don't want to bother you with all my noises. So, my Gartley pattern isn't perfect. I'm sorry, but I was guessing. I drew the channel to indicate that I thought this was going to at least stop going up. I used the Gartley, or I used the fib to predict the Gartley. So let me get rid of that. And all I was doing was lower low predicts a lower high. I guess it'll kick off the pivot cluster. But then you'll notice I went over here and said, well, but if I was using price action, it would be this. So I dragged that across. See, that's doing analysis in real time, predicting the future. I don't know when I drew this. I didn't know if the pivot cluster would act as resistance. It could, might, it probably. But if it wasn't this, no, it'd be price action. So I dragged that across. So it's sort of like an if-then statement. Okay? And it's just the lower low predicting the lower high. Just straight out of the conversation we had before NFP came out. Isn't that cool? So what it's predicting, I don't know if you know how to read this, but what it's predicting is we were already here when I drew it. And the reason I drew this triangle is so that you realize this corner is lower than that corner, aka lower low. That low is lower than the lowest previous low. So therefore, it's going to look or create a lower high. How high will it go? I don't know. How about this pivot cluster or this price action? Good guess. But if it creates that lower high, that would then predict a lower low. Now you can see we didn't get it. All right, well, the first part of the analysis is at least stop buying. If you're an oil trader, once you see this, at the very least, stop buying. Hula? And I think that's good information to have. Wazam! Can you share us your indicator values? Sure. I'll do that for you. Ian wants to know my view on the Dow. I think everything in the United States is overbought. So, where else are you going to put your money? Bonds are going to fall, or are falling. So, if bonds are falling and people are taking money out of bonds, are they going to put it into the stock market? You tell me. Come on, let's talk it out. I mean, I can give you an answer, but why don't we talk it out so that you understand where I get my point of view? I have money tied up in the bond market. The Fed's going to unleash its balance sheet, dropping prices, so I might as well get out while I can. So I sell my bond. What am I going to do with my money? I have $1 billion bond. I'm going to dump it. I'm going to take the cash, and now I need to reinvest it. If I don't reinvest it, I have to give it back to my clients. And if I give it back to my clients, who's going to pay for my yacht? So Mike says ETFs. Fine, great. What else? When you say ETFs, you're basically buying the stock market. Mutual funds, you're buying stock market. Long, short, equity, hedge fund, you're still buying the stock market. But here's the thing. The stock market is overbought. It's trading at multiples of like 1,000 years of revenue. You should have been in the stock market 8 years ago. Yeah, put it somewhere else. It could be the stock market in Europe. What about real estate in London? Actually, real estate in the United States is still a deal. So let's just say a foreigner now is the one that was holding the bond because during the financial crisis, they didn't want to leave their money in Malaysia. So now they cash it out and they bring it back to Malaysia. Well, what happened when the financial crisis was upon us and the Malaysian billionaire decided to buy $1 billion worth of U.S. treasuries? What happened to the foreign exchange market? Think about it. The Malaysian billionaire has decided to buy $1 billion worth of U.S. treasuries. What happened to the foreign exchange market, in particular to the U.S. dollar? U.S. dollar went up. Demand for U.S. dollar went up. Yeah. But the global crisis was upon us. Global macroeconomics was horrifying, and the U.S. dollar got super strong. What's happening now to the U.S. dollar? Hey? The U.S. dollar has been weak, and it's glorious because it means good things. It means the world is at peace again. It means Americans are filthy, stinking rich, or at least the filthy, stinking rich people in America are filthy, stinking rich again. And it's awesome. Right? Another rich white dude walking across the campus of Harvard. Woo-hoo! You gotta love it. Yeah. Cool. So it's a very, very, very good thing. The stock market's at all-time highs and will probably continue going up because people don't want to hold bonds. People don't want to hold treasuries. There's got to be something better to do with your money than earn 0.25% or 0.5% or at 1%. You're like, you can't make 1% in the European stock market? What is wrong with you? You're buying a company that's been around for 100 years. You're paying 30 cents on the dollar. And you don't think you can do better than 1%? Right? Oh my gosh, must be a horrible trader investor, right? So obviously there's better opportunities, and the capital will be deployed more efficiently and more effectively, and that should weaken the dollar because money comes out of the U.S. Treasury market, and it should be deployed somewhere else. Now you can put it in the U.S. stock market, but we've already doubled the U.S. stock market and then gone up another 50%. I was buying at 8,000. We're at 22,000. I mean, oh my gosh. Now you want to get into the stock market. Now, at 22,000. Where were you at 8,000? Oh, well, I was buying oil on the way down. Well, sucks to be you, right? No. So now we're at down 22,000. Now you got to be careful. I'm not saying the Dow's going to come down or the S&P 500 is coming down. What I'm saying is, it's by and large done. So let's say it goes up 3, 4, 5% a year. Kind of like it's supposed to. Bond market should come down, and that capital should be redeployed. But why deploy it here? First of all, a lot of that is foreign money. They're going to take it home because they can't buy the stock market at multiples of 30 and 40. 50, 60, 70. They don't want to buy Apple at 1,000. They don't want to buy Amazon at 1,000. They don't want to buy, you know what I mean? So they take it home. Dollar weakens. Good. That's a good thing. Woohoo! Because all the wealth here has gone up as it was supposed to. What do you think quantitative easing was supposed to do? Increase asset prices. It did. It worked. Oh, people that own things now are richer than they used to be. Thank you, Fed. Thank you, Ben Bernanke. Fed did exactly what it said it was going to do. Great. So now start buying other things. If you already own everything in the United States because you're filthy stinking rich, what are you going to do? Well, the Malaysian billionaire says, well, give me my $1 billion back, sells his treasuries or her treasuries. And now we might invest in Malaysia, Indonesia, maybe China, maybe India. You know, the London boys are buying property in London. They're buying German banks and Spanish insurance companies and Italian communications companies because the valuations are better. The deals are better. And that's why the euro's going up. The euro's going up, but their economy sucks. The dollar's weakening because our economy doesn't suck. Most people don't get it. And boy, when you listen to the guys on TV, they tell you the opposite, don't they? Don't you get like a weird mixed message? It's like, wow, really? So anyways, here we are. Everything is golden. Everything is golden. Great stuff, man. Great stuff. By the way, here's the predicted bottom. Do you know how far in advance we discussed a bottom in the oil market? If you were hanging with me every day? I think 6 months in advance would be fair. So anyways, we'll see what happens. If you're a bull, you think it's going to 51.36. If you're a bear, see, it's hard to believe. See, if you're a bear, you're talking, what is that, 40? It's kind of hard to believe it's going to go to 40, right? No, Gunzi. Gunzi. Gusni. It's Gusni, right? Sorry. I can't see. I don't see very well. My glasses are not that great. I got multiple pairs. My eyes are changing faster than my glasses. So, it's the other way around. It's a language thing. It's not that the U.S. economy is doing better when the price is low. The price is low because the U.S. economy is better. Okay? So, if the U.S. economy was just starting to improve, it means in the recent past, things were bad. What happens when things are bad? What happens to prices? Okay. This is true of anything. Okay. Yeah, prices were down when things were bad. Then all of a sudden, some people start to say, hey, we think things are going to improve. So they start buying, right? So now that things are good, everything has already been bought low. So all the good deals in America have been taken a long time, or have been taken a long time ago. The rich people already deployed their capital. That's why they're rich. What do poor people do? They ride the market to the bottom and then cash out. That's why they're poor. Moderately rich people don't know what to do, so they hire a wealth manager. This guy makes $300,000 a year, managing $100 million a year, has no idea what they're doing. The wealth management industry is funny. It's usually a guy that's got $2,000 in the bank and he's calling millionaires. Let me manage your money for you, sir. Let me manage your money for you, sir. That's the guy that you're going to trust? Oy vey. So anyways, all the good deals have been taken. The rich people already did that. They had money. See, when you lost 50% of your capital, you were broke. When they lost 50% of their capital, they still had $3 billion. So they bought everything cheap, and then it doubled and tripled, and now they have $12 billion. You know, like, yay! So anyways, right? Nah, no, you can't afford me. Don't worry about it. I'm not trying to, don't worry about it. So, all the good deals have been taken. Great. So now, if you want to invest, a lot of the money has been taken out of the United States because it's good. The economy in the United States is good because it's already been invested into. So now we got to go somewhere else. Europe is not good, but it's a lot less bad than it used to be. The valuations are low. The currency is cheap. So now that's the place to deploy your capital. I would put my money in Holland, right? Give your money to the Dutch. Give your money to the Germans. And then what? Wait. And then maybe you start looking at it at Spanish insurance companies or something. And maybe next year you'll start poking around Italy. You're like, hey, Italy, what do you got? And you're like, oh, it's a mess. And then you check out politics. You're like, oh, the politics are a mess. And then you're like, oh, I don't know if I want to get involved in this. It's kind of risky. And then you start going back to Germany again. You're like, is there anything else in Germany? Have I missed any deals? And you look at it, you're like, no, everything's been picked clean. You're like, oh. So then you go back to Italy. You're like, really? Do I want to buy this bank? Do I want to buy an Italian cell phone company? And you're like, the laws are weird. And they're like, well, what about Greece? Let's go look at Greece. There's got to be a deal in Greece. So you buy some hotels in Greece. You buy something, buy a bank in Greece. And it might be worth it because you're like, all right, this company will be around 30 years from now. The valuation's so low. I'm only paying 25 cents on the dollar. I don't really like it. But it's probably better than Italy, right? So you're like, even Greece, right? So you're like, all right, I'll get myself into this. I don't really like it, but the valuations are low. I'm still buying it in euros, which are still cheap relative to everything else. And you're like, yeah, you tiptoe into Europe. Or you start looking at Norway. You're like, all right, Norway's depressed on low Brent. There's got to be some deals there. Somebody's hurting. Somebody's low on cash in Norway. So you start checking things out in Oslo. Maybe you can pick up a skyscraper for cheap, or maybe there's an oil exploration or engineering type company in Norway, something you can get in cheap because they're not doing as well as they used to because of the depressed oil prices. But you're thinking oil will be back up 5 years from now, so why not buy something with a 15-year outlook? And you think ahead a little bit. So that's how the world works, my friend. So now you think like a hedge fund manager. Sorry about that. All right, so we did Kiwi. We got to do yen. Okay, we have some serious decisions to be made here. This is going to impact my next week. Oh, stock market's going to open. Weep, weep. Well, I think today dollar strength was based on average hourly earning. Oh, you mean like, are you talking about like dollar strength over the last hour? Okay. My time frame's a little higher than that. Okay. Yes. Yes. Average hourly earnings, a higher NFP number. Fed's got to unleash the balance sheet or raise interest rates sooner than later. So when the Fed raises interest rates, what do they actually do? They're doing OMOs. They go into the open market and they sell the bond market, lowering prices and raising interest rates. But let's say, whoa, they don't want to raise interest rates. They want to unload their balance sheet. What does that mean? It means they're in the open market selling their bonds. Sort of. I mean, a lot of it is just they're rolling it over, or they're not rolling, they're not reparing. So a bond that's set to expire won't be renewed. Right? They're sterilizing their position. They're not really selling. But it's similar to raising interest rates. Johnny says, do I think USD yen will go up more? Today, no. This is what I'm wondering. What am I going to do next week? Well, it's inconclusive right now. We're in a range. So I think we can agree that this seems rangy. But what if on Monday or Tuesday we're like this? Now I got my bottom and my higher high. You can see just looking at the analysis I've been doing, I've been bearish on this pair. Well, if I get this, I am no longer bearish. Oh yeah, well the low volatility, let's go back to this. What month out of the year has the lowest volatility? What month throughout the entire year has the lowest volume and volatility of the calendar? What calendar month traditionally has the lowest volume and volatility? August. August. Nobody works in August. I think the entire FX Street staff are going to like Switzerland. No, December, are you nuts? December's huge. You crazy. I like you. You crazy. Yeah. December. Oh my gosh. I love December. And you know what's also cool? January. You don't know how to make money in December and January? Woo-hoo-hoo-hoo-hoo. Oh my gosh, really? We gotta fix some things, guys. I know what I'm gonna do in January right now. Did you know that? I already know what I'm gonna do. So like this, I did this. moderator. Do we still have a moderator, or is the moderator already in Switzerland vacationing? Hey, sorry. Maria, you know, yeah. This is my favorite time of the day, being with you guys. So, yeah, see, I think our moderator's already on vacation, drinking Rioja Tempranillo. So, last December 13th. Oh, I know it's hard to be specific. September 13th, it's 7 o'clock in the morning, New York time. I was doing an FX Street webinar, a live interview for 1 hour. Thank you, moderator. Do you have the link to the this interview? It's the one where I'm wearing a 3-piece suit in a tropical paradise with a volcano behind me, live from the Four Seasons Hotel in Nevis. I don't know if you have the link. And I tell you what I've been, it's funny because you watch the video, it's December 13th. I'm like, I've been buying all the yen pairs for months and months and months. I'm like, I'm so happy. Things are so great. And then in the interview, I'm like, but I am now preparing to dump the whole position. Right? Yeah, thank you. Right? And then, so I'm asked, well, why would you do that? Oh, because I'm going to buy all the yen back. So I've been selling the yen for months. In that interview, I'm still kind of selling, but I'm like, but I am now preparing to dump all those positions and start doing the opposite. And then I say, I'm going to do that till the 3rd week of January. And then I'm going to take profit because there's going to be a bounce. But it's a false rally. And then I'm going to dump that again. Dude, like I'm telling you weeks in advance what I'm going to do and why. And then go back and look at your chart and your head's just going to explode. You just guts and blood and snot's going to be all over your desk. And you're like, dude, it's going to be a huge mess. But if you actually do that, if you listen to the interview, takes an hour of your time, and pay attention, maybe take notes, and then go to your chart and start plotting it, and you'll see it's pretty reasonably accurately, since I'm talking weeks in advance, you'll look at it and you're like, dude, by and large, that's pretty accurate. Now imagine now, you have trade plans weeks in advance that give you a reasonable accuracy. Thank you, Kareem. Reasonable. I'm not saying like precise entries here. I'm saying reasonable accurate prediction. So let's say it's the 3rd week of January, and now you are starting to look for a potential reversal, and you know that reversal is not a full-on reversal, but a false rally that may only last a week or 2 or 3. You don't really know. But you know it's going to start now, and it's not going to last forever, and that the real trend is in the current direction. So you know that there's going to be a down, a lower high, and a lower low over the course of weeks. But you've set this up in advance, and you're ready and waiting. Would you be a better trader if you knew what technical analysis to do before you did the technical analysis? Would you be a better trader if you said, all right, this week I think we're going to get a false rally, so I should at least take profit on my shorts, go long for a week or 2, and then prepare for another big short? If you had that in mind and all of a sudden you saw a double bottom forming, wouldn't you be a better double bottom trader if you expected it 3 or 4 weeks in advance to happen? And I think your answer is going to be yes. But it's not the technicals, see, it's the fundamentals. Knowing what the market's likely to do, and then using the technical analysis to time your entries. You'd be a better trader. So going back to oil, I am not joking. We'll go back to oil. In January, I told you, probably you, and other people trading with me, to expect a bottom, right? To expect a reversal, how about, in oil around the 1st of June. But this is like January, bro. January. So, okay, I'm sorry. The bottom in oil happened in the middle of the 2nd week of June. I said around June. I'm sorry it happened on the 14th. That's like 2 weeks late. But I did tell you 6 months in advance that somewhere in here the market's likely to reverse. Huh, well, so wouldn't it be more accurate if you started to see higher highs and stuff happening? If you had a general idea. But see, that is called analysis. That's called a plan. I'm trying to get across, not that you're right or wrong, that if you have a plan in advance based on some form of logic, fundamental or even technical, you're now prepared, ready, waiting, assuming, but you're looking for something. There's a bit of confirmation bias involved, I understand that, but at least you're now waiting and looking for something specific. That is what will make you a better trader. Because if you're wrong and you're waiting for a reversal and you don't get it, well, you didn't get the reversal, so you didn't trade it. And you're like, man, I didn't get my reversal. Because it didn't reverse. So how could you possibly lose a lot of money if you didn't trade it? And you didn't trade it because you were wrong. Now, a lot of you guys, I think, trade just by throwing trades down. Like, oh, I'll try this, I'll try that, get into this, let's do some that. And that's why you lose money. Now, if you said, I think this week we could have a reversal, and then you see a double bottom and you trade it and you get it right, you're going to make money. Because, not that you were right, but because you were right, you got the conditions in which you were looking for, so you traded them. Of course you were right. And when you're in a situational base, of course you're right. Well, then you're going to make money. It's the plan. The plan either puts you into a trade where you're going to make money, or your plan prevents you from trading at all because you were wrong. It's the plan. Stan? Oh, my Minesweeper was upgraded to level 4. That's really good news. Cool. I'm doing too much trader psychology, huh? Too much? Yeah, this looks right. Oh, look at that. I'm live now. Oh, snap. Dude. I'm going to be live watching me live? Cool. I'm live watching me live. It's going to be neat. Hey, me. Look at that. Sweet. I'm going to like me. I just liked me. 2 people disliked me. Yeah, it happens. Yeah. Mom. All right. So. Too much trader psychology stuff, huh? I can't see. I gotta move this over there. Yeah, everyone okay? No. All right, cool. You're like, okay, good. I'm not sure how much you get this stuff from other speakers. Yeah. Look, I didn't mean to upsell you there, but the coupon, I believe, ends today, 60% off. I didn't create it for this webinar. An email went out last Wednesday to FX Street subscribers. So if you want the 60%, you're going to have to call Traders Way or email them or do the chat. But you got to do it today. Whatever. All right. So technical. We can do more technical. Beep, 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 beep. Now, we did price action. We did some pivots, right? Let's analyze gold. Is this going up or is it going down? Well, I'll tell you what. On Monday, and you got to listen to the language here, on Monday, if you were a bear, there's nothing on this chart to tell you to be a bear. Once again, you need to make decisions based on technical and fundamental analysis ahead of time. There are no answers on this chart. You are the one that provides the answers. The market either agrees with your answer or disagrees. If you were already a bear on Monday, then you were a seller at exactly that price. That is exactly the price to sell. And your target was down here. Well, we're not down there. Okay? Okay? So something's happened. We definitely have to mark this, though, don't we? It seems like we're top-ish. Where's the bottom? Okay, and then there's a moderate one in the middle. Yeah, this goes all the way across. Beautiful. Goes, come on, gold. It goes all the way. Can you see what I'm doing here? I'm connecting this, and this across. And I'm connecting this, and this over the top. Okay. And there's a micro one in here too. If you want to add it, that's, again, very subjective, whatever you want. Okay? So now you need to decide. Are you going to wait to try to trade it up? Ugh. Or are you going to trade it down? Is this an old man easing into a hot bath? We don't know. So here's how I would do it if I were me. Or okay, what do you think? It's called price action. It's also a breakout strategy. And right now we're in the middle. And imagine it's World War I and you're in France. And you decide today's going to be a beautiful day to go for a picnic. So you grab your picnic basket and a blanket and a bottle of wine, and some chicken, and some cheese, and some bread, and you walk out in the middle of no man's land. On one side, you have the Allies, and on the other side of your picnic, you have the full force of the German army, and you're having your picnic right in the middle, right here. Oh, it's going to be an interesting picnic, huh? Oh, you can't see that side. Oh, sorry. Interesting. Hang on. Oh, my resolution's higher than your resolution. Oh. Does that mess things up the other way, though? A little bit. But I suppose it's less bad. What if I do this? That's not as good, though, huh? Well, we'll have to do it like that. Okay? So you don't want to be in... Oh, you like watches? Jared's like digging the watch. Sweet. Didn't even know. But all right, so Jared, if you know your watches, let me know what you think it is. So are you saying up or down, false breakouts, and then move? No. There's no false breakout. I've identified support and resistance. Okay? So there's two things likely to happen. One, you trade the area, and I don't have a good drawing tool. So right now what's happening is you should be selling at the top, buying at the bottom, and it's going to move sideways like this forever and ever and ever and ever until it stops. So when it does break, you change from a sideways range-bound strategy to a new trending strategy. So on the left, you're trending up. Over here, as soon as you fail to get the higher high, and as soon as you fail to get the lower low, I mean, by the definition, you range, right? So you should be range trading. But when it breaks the range, you need to then stop range trading and move to a new trend. So if it breaks to the upside, the uptrend continues. If it breaks to the downside, we have now a bearish trend, and you start using Fibonacci. See, if you use Fibonacci in here, you're losing money because you're using a trend trading tool in a range-bound market. Cool? Well, Jared, your fundamental bias wouldn't change. The technical analysis would say the market conditions have changed. Okay? You see what I mean? So you have to employ the right strategy, and with the right strategy, actually not right, you need to employ the right tactics, and each tactic would have different tools. So range, Fibonacci. No range, oscillators. Right? Like, let me show you how complicated this is. Okay? 3 oscillator rollovers. No. Breitling. No. First of all, you should be able to tell it's ceramic. Not going to be a Breitling. But anyways. Oscillator rollovers. You use oscillators in a range-bound market. You do not use Fibonacci. Fibonacci is a tool used for trending markets. So if you said, well, I think that we're range-bound, you flip over, you start using your oscillators, and check that out. Chickadee check, microphone check, 1. Yeah, sure, of course. Of course I'm using MACD and Stokes. I love gold is tanking. Of course gold is tanking. Dollar strong. We already have it. What was the trade plan? First candles down should move us down. Going out to a higher time frame, our first level of maybe counter trend would be here. But the first thing I said was way down here, like 116. I'm like, that's kind of hard to believe. So pay attention to this 118 because it's the first challenge. You know what? I never saw this one before. Let me do this one. So I think we could possibly be down here today. 117.67 target for the bottom today. Or let's get crazy here. It's going to get weird. But let's get weird. See, this probably just be nothing, but let's try it. Yeah, so boy, that's really bouncy. Next level down would be down here. Okay. And then monthly's got nothing for us currently. So monthly pivots do nothing for us. Stop hunts. Yeah, well, if you were going to hunt people's stops, Jay, this 118 would be a place to look for it. Okay. The stops are right between 118 and 117.80. But remember, guys, if gold's tanking, it's because dollar's rising. But we already had that set up. Right? Gold is, by definition, the anti-dollar. So if we have a set up euro-dollar short, then gold is going to fall too. Just sort of by definition. All right, so what should we do? We've done this one, Euro Yen. We'll have to pay attention here, see what's going on. But again, I haven't touched any of these, so at least you can see. At least you can see how I mark my charts up. Oh, don't tell anybody, Jared. That's mine. That's my alpha. Don't tell anybody. But then again, most people haven't been trading Forex full-time for 15 years. But what is an ex-supermodel supposed to do? Yeah, all right, so we got a peso. I do want to do peso, so let's do peso. So this is going to mess things up because I want peso to drop. The USD peso to drop. You can see I already have it set up. And it hasn't happened yet. We're in a tight range. Tight. Very tight. Trying to clean some of this up. I did this in July. So this purple area here is my predicted sell zone. Here I see some support and resistance that I'm going to use for a new entry. You see this vertical line? That's where we said sell the Mexican peso last non-farm payrolls. How many people were here last non-farm payrolls? Because last non-farm payrolls we said this would be a good place to sell. Same thing with this. This is a non-farm payrolls. Said, hey, said, hey, prepare to sell. Sure, nice to have a trade plan, huh? So maybe, just maybe, just maybe, just maybe, just maybe. Now we have dollar strength at the moment. That's the moment. Maybe in the next 48 hours of trading, we're going to dump this thing. I don't know. I don't know any more than you, but I have a plan. You know what the funny thing is? Last week, we were doing this analysis. We added this line, we added this line, I added this purple box, and I said, I don't know, but I'm preparing in a week to get ready to sell this. Then on Monday, we talked about Tuesday being the first, and I was advising Traders Way clients that because the first was on a Tuesday, that we're going to have a laggard entry or a staggered move, and that we shouldn't expect anything till Friday at best. That's a fact. That was here. And it kind of did have it had a down move, then it countered, then it tried again, and then it consolidated. But we talked all about this on Monday before any of it happened. On other months, it's like dump and walk away. No, not this month. Which is, again, because you have a plan. It's not that I'm right. It's because if you have a plan, then you're prepared, and hopefully your expectations are according to like market conditions. So the market conditions told me be underwhelmed this month. Last month was great. The month before was great. The month before was great. The month before was great. But this month, moderate your expectations. Very helpful. Don't you stink? That's the plan. And it is a plan, right? The plan is what makes you successful. And a plan means you made a decision. Now, we all know, like, the analogy of that, you know, you have careful planning before you go to war, but then you get into battle and the fog of war messes everything up and it turns to chaos. Same thing in trading, right? But your patience and discipline and skill and understanding and the fact that you had a plan gives you a huge advantage to the other trader that's just winging it. Okay? If you wing it and I'm waiting for a particular setup based on having the right strategy based on having a correct plan, like, look at my book, Strategic and Tactical Forex Trading. So I have a strategy and I have a tactical plan. And you're just randomly trading. Try this, do this, do that. Use this ADX, use the MACD, use a fib. Oh, this is a third wave of a B correction. And I come in and I have a strategy and a tactical plan. I'm going to win. I'm going to win. Virtually every time. You might get lucky once in a while. I might get unlucky once in a while. But because I have a strategy and a tactical plan, I am going to win. Right? An honorable general is victorious because many plans have been made. No, I build portfolios most of the year, and the other times of the year I just kind of skip. You have a book? Of course I have a book. Can't be an expert unless you have a book. Gee whiz, Jared. Come on. Yeah, so if I'm skip scalping, I'll do like what you saw me. I scalped the euro dollar short and in true fashion lost money. Welcome to trading, right? So I have a stop and a limit. And they're small trades and that kind of stuff. If I'm position trading, then what I do is I build positions. I have many smaller trades. So for example, several years ago now, I accidentally put my trading account in the webinar. I didn't mean to. And I think, oh, you know what it was? I forgot to turn the webinar off. I'm like, hey, goodbye, everybody. This is great. Have a wonderful day. And then I walked away or something, used the restroom. Maybe I was dying for a restroom break or something. I don't know. I come back and I don't realize the camera's still showing. And I dropped my my webinar platform, this one here, and I throw in my live one. And I don't know people are watching. And all of a sudden they see my positions and people just went nuts. Nuts. I'm like, I'm trading, I'm doing my thing. And people are just like, holy crap, right? And something catches my eye out of the corner because the chat room's just going nuts. I look over, I'm like, oh, snap. And they're like, you have 140 trades open? I'm like, what? What? Oh, hang on. Yeah. I'm like, yeah, okay. So we had to talk about it. I'm like, okay, I have 140 trades open. I get it. Yeah, you, okay, let's talk about it. I said, what's the first thing you notice about the available margin? And they're like, it's 98.5% available margin. What does that tell you? What does a 98.5% available margin tell you? Oh, now we're getting all funky and weird, huh? Now it's starting to feel uncomfortable. At least, or maybe it's just me. What does it tell you? That means the trades I entered today were not quite profitable yet, and everything else was profitable. Well, look, I don't care how low risk you are. If you had 140 losing trades, your available margin wouldn't be near 100%. If half your trades were losers, you still wouldn't have 98.5% available margin. I've been in those trades for months. And my lot size is low relative to my account size and all that kind of stuff. But I add to winners. And I don't carry losers by rule, right? So anyways, I was caught with my pants down, almost literally. And then I'm like, all right, you didn't see any of this. Let's go back. Let me teach you how to sell at resistance and buy at support. I mean, that's what I do all day, right? All right, let's talk about a MACD. Okay. Right? Oh, look! Buy at support, sell at resistance. Buy at support, sell at resistance, right? Well, that's essentially what you end up doing, Jared. But, so I think that's probably the funniest thing that, or scariest thing. I guess for me it was scary. Doing a webinar all these years, right? I mean, think about it. I've been doing webinars at FX Street for over 12 years. Right? Something like 12 or 13 years just doing webinars. Right? Isn't that amazing? I think the funniest thing is I spent a week trading by laying down on the floor with my mouse on my floor, and I'm just staring up at my wall of computer screens. I just laid on the floor, and I coached the whole time. Because I just got back from India, planting trees in the slums of India, and I got back with Delhi belly, and I'm so sick. But not too sick to trade. Too sick to sit up? Yeah. Too sick to sit in a chair? Yeah. Too sick to trade? No. I think the best coaching I've ever done was a time when I took, this was when I lived in the other house, so 8 years ago, 9 years ago. I went through a bad streak. I just remember the last day of this bad streak. I made absolutely every amateur mistake you could possibly make. Revenge trading, and I mean, I lost quite a bit of money. And I just remember going, and I sat in my chair, I'm like, holy crap. Because I thought I had got past that as a trader. That I had learned all those mistakes. And that I didn't think I had that in me anymore. And so this is when I was running boot camp. So I tell the FX Bootcamp people, I'm like, I just lost a crap load of money. And I did it because I'm an idiot because my trade sucked. I had no analysis. I was sloppy. I was slow. I just almost like cried. And these are people that were paying me money to be an expert. I'm like, I just royally effed up. Oh, like 20 times in a row I effed up. Just shockingly, amazingly bad trading for a pretty large period of time. Like for days, I was horrific and broke every rule ever made, not just my rules. And I said, so for the next 100 trades, I think it was, I'm not even going to try to make money. For the next 100 trades, I'm going to throw down 10 OCOs or whatever it was, or 25 OCOs. And I'm just going to do that for the next 100 trades. And I'm going to build confidence in my skills again, totally regain control. Just absolutely force myself into discipline. Yeah, a little bit. I wouldn't freak out. We're at the midpoint psych. Don't freak out too much, man. Right? And so for the next 100 trades, I rebuilt my confidence and I rebuilt my discipline. And that was the last time I was ever a bad trader. I mean, you can have losing times and losing trades and losing periods, but that was the last time I was bad. And I was shocked because years had gone without me making those kinds of mistakes. Luckily, you know, I'm probably due. I'm probably due. I should be careful. I need to, like, see, I'm that type of person now too. Like, you know what? It's been 8 years. It was probably 8 years past, you know, before then. So now I'm in that period where I'm totally capable. I need to redouble my effort. I need to redouble my consistency. I need to redouble my discipline. I need to do whatever it takes to stay confident, stay disciplined. Because usually you lose a lot of money after making a lot of money. You know what I mean? So just that, like, it just spooked me. I'm like, oh my God, I got to double down. I need to recommit to being disciplined. Right? We all have demons inside, right? At any time, the genie can come out of the bottle. The bad genie. All right, so we're on the support line. Let's take a look, remind ourselves why it's there. I have it this top, that bottom. It's a 4-hour 55. 4-hour 55 will predict a lower high, lower low. Let's just call it a head and shoulders, left shoulder, right shoulder. So now I know what I'm going to do Monday. So you're going to go to tradersway.com. If you have an account with Traders Way, you can trade with me every day. We can hang out every day like this, just you and me and a few friends. All right, guys, I'm going to bust out of here 15 minutes early. I'm sorry, Traders Way. I mean, FX Street. Sorry, FX Street. I'm going to bail 15 minutes early. I got something super big brewing right now. And my phone's ringing. So if it's okay, I'm going to bail 15 minutes early. Live demo doesn't matter. Yeah, every day. Well, not Saturday and Sunday. Thank you, Joseph. So, hey, peace on earth. May the pips be with you. May your profits be above average. Okay? It's at Traders Way, man. Tradersway.com. In your back office is a link to the webinar. So thank you, FX Street. Thank you, moderator. I know it's time for you to be drinking margaritas. Ay, 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 ay. Thank you for everyone that's a client at Traders Way. I hope to see some new people at our webinar on Monday. If you want the coupon code FX Bootcamp, you need to, it's only for the summer school, which is access to everything, and you got to ask Traders Way support for it. And that's all I have for you. Yeah. So thank you again, FX Street. You're wonderful, good-looking, kind-hearted, tall people with natural athleticism, big brains and bigger hearts. You're good people, FX Street. Thank you for everyone to attending. Thank you, YouTubers. Next time, join the chat, YouTubers. Namaste. May the pips be with you.